A company's largest objective is to make profits. Now, how can a company make profit? By selling product and services and then collecting revenue. But in doing so, a company would be incurring expenses as well. So what can we understand? The revenue collected minus expenses incurred is equal to the profit or maybe even loss of a company. So as investors who want to pick good quality companies to invest for the long term, shouldn't we all be considered about these three? The revenue of a company, the expenses incurred in a company, and the eventual profitability of a company. Absolutely yes, right? Now, do you know how to do it? That's exactly why I am here for. I'll teach you how to analyze the profit and loss statement of a company in order to know if the company is doing well. So hi all, welcome to the 15th episode of the complete learning series of stock market investing and trading. As always, I put all these videos into a series. The series is available here in the playlist up above. Make sure you watch all the videos in the right order and learn really well. Let's all invest together and grow together. So again, a big congratulations to all of you, given the fact that you watched the previous video and learned how to analyze and make sense of the annual report of a company. Now, if you haven't watched the previous video, make sure you watch it from the I button up above. So it was super valuable. We all know what an annual report of a company. You all clearly know how to make sense of and how to analyze the annual report of a company. Now let's keep a next step and let's learn how to analyze the three financial statements of a company. Now, why is it important? All the important data, all the important numbers regarding to how the company is performing can be found out from the financial statements of a company. What are the three financial statements of a company? Number one, the profit and loss statement. Number two, balance sheet of the company. Number three, cash flow statement of the company. So in the next few videos, we are going to learn exactly this. So the agenda of today's video is super clear. We are going to learn how to make sense and how to analyze the profit and loss statement of a company. Super important, right? Just like the last video, we're going to take example of Dmart, Avenue Supermarts Limited, right? You're going to take the example of Dmart. I'm going to show you how to analyze the profit and loss statement of Dmart, with which you can learn generally how to analyze the P&L statement of a company, with which you can open or download annual report of any company and then analyze its P&L statement. Cool? Agenda is set. Attendance is marked. Then let's get started. Without further ado, the name is Shariq Shamsuddin. Welcome to MarketFeed. Welcome again to a very exciting class where we are going to learn how to analyze the profit and loss statement of a company. So let me tell you this again. We are going and learning how to analyze the profit and loss statement of Dmart. So in order to know how to download the annual report of Dmart, how to find out where the profit and loss statement of Dmart is within the annual report, you clearly have to watch the previous video. It's given here in the I button. Make sure you watch that. Then you can clearly understand this video. So let's get right into it. The very first thing we are learning is why to analyze profit and loss statement. Right? Why even do this? So the answer is very clear, right? Number one is we have to understand and we have to know what is the income or what is the revenue of the company. Not just knowing what the income or revenue is in this year, it's also very important to analyze how it has been growing over the years. That is, compared to the last year, has the income or revenue grown? Or in the last 5 or 10 years, is the income growing year on year? If it's growing year on year, it's amazing. It clearly shows that the company is growing, right? So these are numbers which clearly puts perspective as to how the company is faring or performing. The second thing we have to study is the expenses of the company. So maybe a company is generating good income, but what if the expenses are really way more than the income? Then the company would be in loss. So it's very important to know what all expenses the company is incurring compared to the other peers in the same industry. Is this company having more expenses? In that case, the company wouldn't be a good company, right? So very important to look into each and every items where the company is actually incurring expenses and compare it with the industry peers and understand if this company is actually frugal when it comes to its expenses. And the third and the most important we will be learning or we should be understanding from from a P&L statement is the profitability of a company and its growth again, right? So first of all, there are a lot of companies which are not generating profits at all. Maybe it is okay. I'm not telling every company should be generating profits. As we know, in the famous startup ecosystem today, a lot of companies knowingly incur losses, maybe just to acquire customers now. Maybe they have a clear roadmap or a plan as to how in the future they can be in profits. Maybe that is also fine. So you have to do a clear study of the profitability of the company. Most of the listed companies are profitable only. So we have to see how much profits they are generating, and more importantly, how the profit numbers have been growing over the years. Very important. The profit has to grow over every year. Only then we can say that it's a really good company. It's a growing company. So a growing income, expenses in check, and growing profitability as well. Then we can clearly say it is an amazing company that we are looking at. So in order to do all this study, where should we look at? Annual report has what? 300, 400 pages. In that, there is one specific page, consolidated profit and loss statement of a company, and that's exactly one page we have to look at. That is all. That single page has all the numbers which will tell us all these things. Cool? That's exactly what we are going to learn today. So let's come into the agenda. What is the P&L statement? Now, as you can see here, the profit and loss statement of a company is also called its income statement. Okay, that's another name of profit and loss statement. Now we can see the profit and loss statement shows the company's income and expenses during the time period. That is the annual report or the financial statement or the profit and loss statement is published once every year. So every year's all income that the company got and all expenses incurred by the company, everything is shown properly in the annual report. It also shows how the income is transformed into net income or net profit. That is, the P&L statement will actually show you that, okay, this much was the income, this much was the expenses. So income minus expense is the actual net income or net profit of the company. That is, the P&L statement shows how the overall total income is transformed into the net profit. Cool? Moving ahead, I'll make this even simple for you. The structure that you see on the screen right now is common. It's similar. It can be found out in each and every profit and loss statement of any company. This is the exact structure that we can see. So you take any P&L statement. What is the first thing on top you'll see? The income of the company. How much money the company actually made in the last year as revenue. Now, the another name used for income is top line. Maybe you would have been watching TV and you would have heard someone saying, okay, the top line of this company was 10,000 crore rupees. Maybe you did not understand it then. So top line of a company means the revenue of a company. Okay. So after income in a P&L statement comes expenses. What are expenses? What all costs which were incurred by the company, what all spends the company did in order to create the revenue. So those are called expenses. So first come income, then come expenses, then comes tax paid by the company. So it's super important, right? Most of these are profitable companies, so they have a huge tax liability. They have to pay tax to the government. So it is clearly shown in the profit and loss statement what is the tax paid by the company. And finally, it shows, or a profit and loss statement shows the profit, or maybe in case if it's loss, the loss generated by the company in that year. So very interestingly, as you can see here, the profit or loss generated by the company is called the bottom line of the company. Right? So we can clearly say that last year this company made a top line of 10,000 crores and eventually it ended with a bottom line of 500 crores. Now you understand it, right? Amazing. Now it's very clear here, right? Profit or loss of a company can be calculated by the overall revenue minus expenses incurred minus all the taxes paid. We'll get the profit or loss of the company. Very simple. Now, as I said earlier, this is the exact same structure used in the profit and loss statement of every company out there. Now that you have understood the basic structure of a P&L statement, let's actually get into the P&L statement of Dmart and verify it. Okay, let's make sure it is the same structure as we discussed. So going into the P&L statement here. So again, reminding you, the consolidated profit and loss statement is the 157th page in a nearly 230 page annual report of Dmart. How to download this, how to make sense of annual report, we have already learned in the last video, so make sure you watch it. Again, final reminder. Cool. So now in this page, we can see the consolidated profit and loss statement of Dmart. Now, what structure did we learn? We learned that the first thing, the profit and loss statement would be showing us income. What can we see here? See, income, right? So income is exactly what we can see here. Exactly here, it says the total income of the company. It also gives a breakdown. Revenue from operations is 30,976 crores. See, it is in crores. Everything is in crores here. So revenue from operations is 30,976 crores. Other income is 117 crores. And the total income is 31,993 crores. Now, one thing for clarity here is there are two things or two sets of numbers shown here, right? This set given mostly in bold is the numbers for the financial year ended on 31st March 2022. That is for this year, whichever year we are analyzing. So the numbers here, this set of numbers shown here are the numbers from the previous year. So the previous year numbers are shown just next to the current year, just for the purpose of comparison. We can quickly compare, right? We can quickly compare and see last year's income was 24,339 crores. This year the income has grown to 31,093 crores. Amazing. Clear indicator that the income has grown. Right? Cool. We'll definitely get into learning more about income and expenses. We'll do. But quickly now, what are we doing? Verifying whatever structure that I said is that of a P&L statement is there in an actual P&L statement. So first thing we said is income, and we can clearly see income is shown here first. Second thing, what did we say? Expenses would be shown in a P&L statement, right? See? The next thing shown in the P&L statement is expenses. And finally, the total expense of Dmart in the last year is 29,029 crores. What is the third thing that we said would be there in the P&L statement? Tax paid. And what can we see here? Tax expense. See, total tax expenses are here. See, total tax expense is 1,492 crores. And finally, what did I say would be there in a P&L statement? The profit or loss, which would be revenue minus expense minus tax paid. Let's come here. No. So here we go total tax expenses. And finally, we have this, right? Net profit after tax, and which is 1,492 crores. I'm sorry, earlier I said 1,492 crores was a tax expense, but again, looking clearly here, total tax expense is 571 crores. The actual net profit after tax is 1,492 crores. So this is also called PAT. Profit after tax, PAT. So if you see here, it's a very simple mathematical formula, right? 31,093 crores of income minus 29,029 crores of expense minus 571 crores of tax expense is the net profit or profit after tax of the company, 1,492 crores. So this is the exact same structure that you can find in any P&L statement. Download annual report of any company, find out the consolidated profit and loss statement of the company, and this is the structure. You can clearly see what is the income, what is the expense, and what is the profit after tax of the company. Super amazing. If you learn so much itself is amazing. Congratulations. Let's quickly move ahead and make some more sense out of the P&L statement, right? So first, let's go line by line. Let's first learn something more about income, then about expense, then about taxes, and then finally about profit after tax. The first thing is income, right? So income normally tells, as you can see here, it tells revenue from operations and other income. Now this is important, right? Revenue from operations is directly linked to whatever is the primary operations of the company. Now we know Dmart is a supermarket chain. What is their primary income source? Sale of products in their supermarkets, right? So income from that would be shown here, revenue from operations. And clearly revenue from the primary source of income should be the highest, and it is clearly the highest, right? 30,976 crore rupees came from there. Then there is something called other income. Now as a company, it will have other income as well, right? Maybe it has some investments, they are getting some dividend yield from there, or they have a lot of money in their bank account, they have interest income from there. Correct. So there are other income also which are not necessarily coming from the primary operations of the company. So those are called other income. So that is only 117 crores and total comes up to 31,093 crores. Now we learned in the last video that you can read any line item here and there is something called notes. So if you go into notes, you can exactly have the breakup of what exactly is constituting the other income. Let's do that for an example. Let's do that. No, it would be fun. So I've already looked into it. I know it is in page number 188, I guess. Right. So note number 26 tells us more about revenue from operations. Let's see, sale of goods. Obviously, Dmart main operations is selling of goods in their supermarket. So sale of goods is the largest one with 33,789 crores, and there are some other items also. You can definitely look into that. Now let's look into other income. What is it? See, as I said, the largest line item in other income is interest on deposits and advance. Probably the money they have, they put into the bank, maybe they're getting interest on that. That is 103 crore rupees. Then they're getting rent and amenity service income. So they have in their operations, they are getting some rent from somewhere, a 3.5 crore rent they are getting from somewhere. And exchange gain, so they had probably some forex activity, and they have a 2.7 crores coming from that, and miscellaneous income of 3.62 crores. Anyways, the point is, come into the notes, you will get a breakup. So this is Dmart. Maybe that's why there isn't a lot of line items here. Maybe for another company you're analyzing, when you come into other income, maybe there are a lot of other incomes there. You can actually read. Now again, for me, this is a very romantic activity, I always say. See, we always admire large companies like Reliance Industries and Tata Motors. So think about this, no? Such companies, they're actually putting out whatever their income is, whatever their income sources are, whatever their expenses are, everything out there in the open for us to analyze. How amazing is that? So I always find this really interesting whenever I get into the, especially the notes section, so that I can actually see where exactly expenses were incurred, where exactly income is coming from. When we go into expenses, things would actually get even more interesting. So that is what income is. So revenue from operations would be there, other income would be there. So total income would be the sum of the above. Exactly what we can see here, right? Some of these two are shown here as the total income of the company, right? 31,093 crores. Very clear. Let's move ahead. The next section we are understanding is expenses. Now, when we come into expenses, there are multiple types of expenses incurred here, right? Even if you see here, there are multiple line items here. The same line items I have written here also. Maybe I'll look into here and explain it to you what they are. So, see, purchase of stock in trade. What are they? Now, Dmart is a supermarket. They have to sell an item in the supermarket. Now, in order to sell the item and make profit, they have to first purchase items, right? They have to purchase items, keep them in their stock, and then sell items. So, what is the primary or the largest cost of a supermarket? Purchasing goods, right? They'll purchase goods and then they'll sell it, and in between they make some profits. So purchase of goods or purchase of materials to be sold should be their largest expense. So purchase of stock in trade means the same. The next one is changes in inventories of stock in trade. So let's actually go to the P&L statement and look into it. See, purchase of stock in trade is 26,891 crores. Makes a lot of sense, right? The next ones, maybe the important ones, let's look here. Yeah, this is something everyone can understand, right? Employee benefits expense. What are these? Basically paying salaries to the employees, right? Not just salaries, their PF, their gratuity and whatnot. So basically employee benefit expenses, very understandable amount paid out to the employees. Then comes finance costs. Why not, right? Just like in other income, we had interest earned on the money deposit. Finance costs can actually contain, if the company has taken some loan, then paying back these loans can actually come under finance costs. So related costs incurred can come under finance costs. Then comes depreciation and amortization expense. That is nearly 498 crores. Now I know a lot of you wouldn't know what depreciation and amortization is. Give me some time. We'll actually go ahead and learn what depreciation and amortization is. And then there are other expenses of 1,464 crores. Basically, all these expenses add up to the total expense of the company, which is 29,029 crores. Now, maybe let's again get into notes and read something more, right? Maybe let's see what all are the finance costs are, right? Maybe let's even go and see what all are the employee benefit expenses are. Let's also see what the other expenses are. I'll definitely enjoy it. So that is in page number 188, 189. So coming down. So yeah, employee benefit expenses, as we can see here, salaries, allowances and others itself is 530 crores for the company, right? Expenses on employee stock option, ESOP, that's nearly 6 crores. Contribution to provident fund and other funds, as I discussed earlier, is nearly 41 crores. Employee welfare expenses is a whopping 37 crores again. Coming down, finance costs, interest on non-convertible debentures, NCDs, right? So a lot of companies actually issue non-convertible debentures. Okay, let me not get into it. Let me not make it complicated. Think that they've actually paid interest in multiple places, and 53 crores is basically interest paid out, right? And finally, let's look into other expenses which are always really interesting, right? See, electricity and fuel charges are 207 crores. I mean, interesting, right? We all see Dmart outlets, supermarkets around us. So think about it. Now when we look at Dmart, we know, okay, all the Dmart outlets put together along with their offices, they're paying 200 crores every year as electricity and fuel expenses. I enjoy this for some reason. I hope you will also do the same. Coming down below, repair and maintenance. Look, it's coming down. Building repair is 17 crores. Plant and machinery is 54 crores. Traveling and conveyance, probably by their leadership team or the team entirely, is another 22 crores. And miscellaneous expenses is 270 crores. Anyways, all the other expenses is 1,464 crores. And coming back into the profit and loss statement, the overall expenses, if you put together, is 29,029 crores. Cool. Now, as I said earlier, I said I'll come back to this, right? Depreciation and amortization expense of 498 crores. Let's actually take some time and understand what depreciation and amortization is. Now, again, these are applicable only in the case of assets. Okay? Then let's understand what an asset is. And assets are resources that provide economic value to the company. Assets are capital intensive stuff mostly, which provide economic value to the company. For example, let's take up machinery. A company bought a machinery worth 10 crore rupees. Now, they spent 10 crore rupees, they bought the machinery. The machinery is actually providing economic value to the company, right? A plant machinery. So that machinery can be called an asset. Or maybe a company bought a car so that the employees could travel or the leadership team could travel. So that is providing an economic value to the company. The car could be called an asset. Or they built a new complete factory. The factory is providing economic value, so that can be considered an asset. Now, when we talk about assets, there are two types of assets, right? One is tangible asset. The another one is called intangible asset. Now, a tangible asset is an asset which has a physical form, like a plant machinery or a factory or a computer or a car. All of those are tangible asset. Now, intangible asset has no physical form. It's not physical in nature. So, intangible asset examples are trademarks, intellectual property, softwares for that matter. All those could be considered as intangible asset. Now, again, why are we discussing about the same is because now when an asset is acquired, a huge expense is incurred there. Now, let's take a very simple example, right? Let's say I am running a company. I bought a car this year and the car costed me 10 lakh rupees. Now, in my expenses, can I show 10 lakh rupees this year itself? It doesn't make a lot of sense, right? Because the car is not just used in this year. The car can be maybe used for 5 years. So, why is its expense shown just in 1 year? Shouldn't the expense be spread across the whole usable years, which is the 5 years? Making a bit of a sense? That is what is called depreciation. Okay. The initial cost of an asset would be depreciated over maybe 5 years or whatever years you are intending to use the asset, and each year a small amount would be shown as expense in the profit and loss statement. Now, let's go back into the example of a car, right? 10 lakh rupees is the car. I bought the car this year. Now, again, going by the law, this is again available out there. You can easily find it. The first year depreciation that could be claimed or that can be shown as an expense for a car, for a vehicle, is nearly 15%. So, this year I bought a car worth 10 lakh rupees. In my company's profit and loss statement, I can show 15% of that as an expense, which is nearly 1.5 lakh rupees. So, in my profit and loss statement, in the expense, under depreciation, I can show that depreciation of the car purchase and the car's value is 10 lakh rupees. The depreciation amount is 1,50,000. Cool. The next year I can show, again, second year depreciation is nearly 20%. So that amount I can show next year. So over the course of a few years, I can completely show the amount of the car as expense, not in 1 year, but over multiple years. I hope you understand this a bit at least, or maybe you can read more about this, you can clearly understand. I hope something is at least conveyed here. So, depreciation is mostly used when it is a tangible asset. The same concept, if you want to apply on an intangible asset, it is called amortization. That's it. No other difference. So, depreciation is for a tangible asset, amortization is for an intangible asset. Cool? I hope you understand that. Then we have again clearly covered the expenses part. Then let's move ahead into the next part. Very simple now. So next what we see on the P&L statement is the profit before tax. Very clear, right? It's literally only profit before tax. What is profit before tax? Your income minus your expense is your profit before tax. It's also called PBT. What is the next thing on the profit and loss statement? Tax paid. We can come here, right? Tax expense. Tax expense, there are multiple line items here. Need not look into it. The overall tax, right? Overall total tax expenses is 571 crores. Very clear, straightforward. Need not spend more time here. So finally, after everything, we can see the most important thing that we have come here for, profit after tax. That's exactly what we see here, right? Net profit after tax, which is 1,492 crores, 31,093 crores minus expense of 29,029 crores minus tax paid of 571 crores, which is 1,492 crores. So we clearly got the profit after tax of Dmart. Now this is it. This is all you have to understand regarding the P&L statement of a company. Download annual reports of companies, look into their P&L statement, go into the notes, understand stuff and make sense of a P&L statement. Cool? But now you might ask me, hey Sharik, we only discussed till here, net profit after tax. This is only half of the page. There are a lot more information here. Should we be looking into it? With all honesty, I would say it's not really necessary. I mean, for a person, for the matter of looking into a company, analyzing it to invest into the company, looking so much is enough. But let me take some time out and quickly tell what these are, right? So there are something called other comprehensive income. Right, what you see here, right? Other comprehensive income is a total of minus 5 crores here. Now, comprehensive income actually contains of income and expenses which have been incurred this year, but again, those are not meant for this year. Those are meant for the next year only. So those amounts are set off for the next year. They need not be actually taken into a lot of consideration this year. So they can be actually removed from the calculation. But again, here the numbers are not at all significant. So you need not actually look into it. So let me tell you again, income, expense, taxes and profit after tax. You need to look only so much. Now you've understood what other comprehensive income is. Just keep it to your understanding. You need not look into it. Not very necessary to look into it whenever you analyze a profit and loss statement, I'd say. Now, if you come down, you can actually see this also, right? Out of the total profit of the company, there is something called, see, profit of the company is 1,492 crores. See, exactly what we saw earlier as well. Profit after tax. In that, we can see 1,492 crore 55 lakh actually belongs to Dmart, the parent organization. But from that, 15 lakhs actually belongs to the subsidiary, the other entities in the subsidiary. So that 15 lakhs is actually given to them. So what is remaining is actually the profit that we are discussing here, right? Which is 1,492 crore 40 lakhs. So there are some other stuff, but again, let me remind you what has to be taken into consideration is income, expenses, tax paid, and the profit after tax of the company. One another important thing that you see on the profit and loss statement is earnings per equity share. This is famously called as EPS, earnings per share. So when you come here, you can clearly see that the earnings per share of Dmart is 23 rupees. Now, how is earnings per share calculated? If you actually think about it, logically, it's very simple only, no? Earnings per share. What is the earnings of the company? The total profit generated by the company, right? It's 1,492 crore rupees. That divided by total shares in the company, right? Total income of the company, as in net income or net profit of the company divided by total number of the shares in the company will give you the earnings per share, EPS of the company. Now you may ask me, what is the relevance of EPS? I'll tell you. It's actually a very interesting question, and I'll actually try to give you the perspective of a business owner. If you think like that, you can clearly understand what is the relevance of EPS. You'll understand that higher the EPS, it is good for a company, and lower the EPS, it's not that necessarily great. So actually, let's come into ticker tape here. I've already opened Dmart here. So if you see here, the current market price of Dmart is 4,426 rupees. So if you actually pay 4,426 rupees, you'll get one share of Dmart. And if you have one share of Dmart, that's actually generating profits of 23 rupees. Now you tell me as a business owner, will you be happy with it? I'll even set you a larger perspective here. So you spend 4,426 rupees and buy every share of company out there from other public shareholders, from Mr. Damani himself, you buy all the shares of Dmart and you become the primary sole owner of Dmart. How much money would you be spending there? You should be able to tell. What is that term called? Market capitalization, right? That is 4,426 into total number of shares available. So how much is that? It's shown here, that is 2,95,197 crore rupees. So if you're spending 2,95,000 crore rupees, you can acquire or you can be the sole owner of Dmart, and then you can enjoy the overall profit of 1,492 crores. So as I said, if the EPS is high, then it means that you can actually feel that it is a higher return giving business. If the EPS is low, you'll feel that the returns given by the company is slightly on the lower side. Now, when we discuss this, let me make one more thing very clear. Now, if you actually spend 4,400 rupees, do not actually expect to get this 23 rupees profit in hand every year. Okay, don't think that this is just earnings per share. This just means that the company actually earns so much. Okay, your equity share earned so much, but you do not actually get that amount in cash. What is that called? That is dividend. Whatever money you get into your hand is dividend. So basically EPS is 23 rupees. Now it is up to the company's management to decide, out of this 23 rupees, how much money can we actually shell out to our shareholders as dividend. Cool. Let us find out how much Dmart actually gave out as dividend, right? It's in page number 37. I actually already found it and kept. So coming here, we can see dividend section here. With a view to conserve resources for expansion of business, your directors have thought it prudent not to recommend any dividend for the financial year under review. What does it say? Dmart is not paying out any dividend at all. So if you actually put 4,400 rupees and buy a Dmart share, you're not going to get any money. Your share actually generated a profit of 23 rupees earnings per share, but you do not get it as money because the company decided not to pay out any profit as dividend. I hope this is as clear as possible. Now coming back, this is how I'll end this video, right? What is in the P&L statement? We can find the revenue or the income of the company, which is called the top line of the company. Then we can see all the expenses incurred by the company. Then we can see the tax obligation or the taxes paid the company. Now you subtract all these from the revenue, you'll get the profit or loss after tax incurred by the company, which is called the bottom line, and that is a very, very important data of a company. Now again, in today's video, I hope was very simple. You have clearly understood it. Now as always, I would give an assignment. Okay, download annual report of some other company, not Dmart's, some other company, find its P&L statement and try to make sense out of it. Cool. Now, when you're trying to make sense out of it, now what you see is a lot of numbers. Okay, income is so much, expense is so much, the profitability is so much. Now, how to make sense of these numbers? There are some metrics that you should be looking into. There are some financial ratios that can clearly help you tell if the company is doing well or not. Now, after learning how to analyze these statements, these three financial statements, we'll learn about the key financial ratios of a company and what each ratio means. Maybe some ratio being high is good for a company, some ratio being low is good for a company. We'll learn all those, no worries at all. Okay, now before I am signing off, I would actually say that if you go into ticker tape, if you go into the financials part here, you can see the income statement here, which is what? The P&L statement, other name is income statement, right? You can see balance sheet, you can see cash flow statement also. So if you go into the income statement or the P&L statement, see, you can see what is relevant and important here in a single glance. See, financial year 2022, 2021, 2022, 2020. See, total revenue has been growing from in 2018 it was 15,000 crores. 2019 it grew to 20,000 crores. It's been growing consistently up till 31,000 crores this year. Let's look into the profit also, right? Profit is the net income. In 2018 that was only 806 crores. Grew to 900, then 1,300. It dipped a bit in 2021. Probably COVID effect. See, putting our intelligence and knowledge also into the scene. It dipped a bit, then it came back stronger in financial year 2022. So a lot of basic information can be seen here. And see, the earnings per share is growing. I said that growing is also good, right? So that is what I really want to say at the last. You can look here as well to get a lot of information at a glance also. So that is it from my side for today's video. So as always, if you like the video, make sure you like it. Get into the comment section, ask me questions, ask me doubts. Either me or my team would be looking into the comments and will try to give you answers. invite more people into our community, share the video with people, ask them to learn, ask them to become value investors and create wealth in the long term, right? And if you haven't joined my exclusive community that I maintain on MarketFeed app, the link to join the community is also given in the pinned comment and description. I conduct and host regular live Q&A sessions there, discussion sessions there. You can come interact with me and my team and your fellow learners also, right? So yeah, that's it from my side for today. As always, let's learn, invest, trade, and grow together. See you in the next class. Bye-bye.